What I'm about to show you is going to increase your PNL. This overpowered indicator is going to make your life easy, especially if you are interested in trading a lot of Believe app meme coins. All these coins that you're seeing on the screen are more than going to 10x in the next coming 3 to 6 months. The only thing that you're supposed to do is position yourself at the right time. Timing is very important. Getting the best fair value tokens is going to really help you out, and this is one of the reasons why utilizing this indicator is really absolutely going to change the way that you trade meme coins in general. In order for you to make the most out of this strategy, you have to avoid trading the pause newly created launches. So the strategy that you're going to be using is looking for the coins that have been endorsed. So when I was showing you the app, right, the Believe app, you're going to see the featured meme coins. Those featured meme coins are pretty safe investments. The reasons why you are doing that is you do not want to get rug pulled. But most of these coins that are being recommended by the Believe app, Twitter page, and also the apps that are featured in the actual Believe app these are definitely going to be around for the next 3 to 6 months. At least you are safe. So the overall strategy is utilizing the already established meme coins and just basically figuring out the fairest value possible. Now, in order for you to get the cheapest price and the fairest price, right, you have to use specific volume indicators. And this is one of the reasons why I really wanted to introduce to you a very good, sophisticated, underrated, overpowered indicator called the volume profile, because the volume profile utilizes volume as one of its critical element when discovering the fairest price possible. Number one, it highlights specific areas where the point of control is. A point of control is a level at which most of the trading, or basically over 70% of the trading, occurs when it comes to a specific level or time frame. And this particular point of control is going to be very important due to the fact that it's going to allow you to position yourself better. Let's say, for example, if you had the knowledge that the fairest price or the likely area where the price is going to gravitate to is below 50% of the current trading level, what would you do? Would you, FOMO and go in when you potentially know that the price can drop another 50%, or you would just basically, sit on your hands and wait for the price to go to a specific level? The reason why I really like this indicator is because it allows you to have patience and it gives you a broader perspective of what other traders are doing. One thing that you have to understand about trading is just an illustration of the total average actions of all the traders. Whenever you have a particular chart, right, the only thing that you are being told is the demand and the supply, where the price is gravitating, and the behavior of the different traders. So for example, in this particular case, this particular pump right over here shows that there was a lot of greed in the market and a lot of people were bidding to pay a little bit of a higher price. They were willing to pay higher than anybody else, and this is one of the reasons why we had gigantic candles. During this situation, right, we are retrieving a lot of information, and if you take a look at this particular price chart, right, we are able to pinpoint points of control. Points of control are the levels where the price gravitates towards. Okay, so if you take a look at this chart, right, of course we're using the 15-second. If you had the knowledge where the point of control is, right, where most of the trading occurred before a particular pump, then you are most likely going to be patient enough in order for you to only trade this level. So in order for you to get the volume profile or the visible range fixed volume type of profile, all you have to do is go to your Axiom.trade and click on indicator. Then you search for these indicators. It's called the volume profile fixed range or the volume profile visible range. So this portion of the chart is being represented by the indicator that I'm talking about, and this is what you are going to master. Okay, so in order for us to first of all understand how we can utilize it, we need to figure out how it works, and this is one of the reasons why I'm gonna leave the links in the description for this site, and moreover you can also do your own research, figure out and understand how to configure the volume profile visible range indicator, and study a lot about it, because it's going to allow you to understand what the hell is going on. But anyway, since we're doing this together, right, let's just get to read this. So basically, volume is one of the critical elements when analyzing a stock's price chart. Traditionally, traders analyze volume with respect to time. However, what if you could analyze volume with respect to price instead? So the biggest difference between a lot of different volume indicators is the volume profile analyzes volume with respect to price in comparison to time. Okay, so it respects the action of the price, and this is one of the reasons why I was telling you that the volume profile shows what is happening with relation to the price. Okay, so getting back to what we were talking about, volume profile is a charting tool that plots trading volume against price rather than time. By doing so, traders can identify crucial levels where significant activity occurred, and these levels often serve as strong support and resistance levels. Now, this is a very important point that I really want to stress. Support and resistance levels are going to be highlighted, and this is one of the reasons why it is a very powerful tool. Unlike traditional volume indicators, volume profile highlights areas of high liquidity where the price tends to gravitate, and the zones of low liquidity where the price can easily rapidly move. Now, areas of low liquidity, let me show you a practical example. For example, here, right over here, if you take a look at this volume profile illustration right over here, right, we can see that these areas where there's very little blue and yellow figures right over here, right, these are low liquidity levels, and this is one of the reasons why we saw an extreme pump. So once you are trading, right, you know better not to get in at these levels, because you know that if it loses support, it's most likely going to end up here. So instead of you getting to purchase around these levels, right, just wait for the price to gravitate towards this black hole right over here, which is sucking the price down, because we know for a fact that this is where most likely the support level is going to be around this. The support level is going to be around this level. Once you get to understand that, right, your main objective on a daily basis is going to be understanding the different types of shapes that you're going to have, because from a visual perspective, these shapes of the volume profile are going to help you figure out how to conduct yourself in a trading session, or when you are trading a certain project. For example, let's take a look at the different types of shapes. But before we do that, right, let's take a look at the point of control. So the point of control basically is the price level where the highest volume of traders occurred. This level often acts as a pivot point for price action. So if the price has been trading around this level, right, it's just a matter of time until the price comes back down to the point of control to either find support or resistance. The point of control is going to give you an understanding if you're going to have a breakout towards the upside or a breakout towards the downside. Okay. Number two, high volume zones. Zones with significant trading activity. These areas create a gravitational pull, slowing down price movements. Low volume zones with minimal trading activity, prices can quickly move through these areas due to low liquidity. Okay, so you've got low volume zones. They look like this. They usually have very small bars in comparison to the other large ones. So this level right over here has got low volume zones. So let's say, for example, you were trading a project, right, and it's doing this, right. This is the resistance, this is the support, and this level is a low volume type of level. if it keeps on hitting its head on the resistance, right, and if it breaks out, you already know that you've got this low liquidity level, which is basically going to act as butter, and the price is just basically going to be able to slice through, and you're going to figure out the next high volume zone, which is going to act as resistance. So you're going to easily be able to snipe in and out. And one of the biggest problem that a lot of you guys usually have, especially when you are trenching on a daily basis, is you do not really know when to take profit and basically when to let the trade ride. So understanding low volume zones, high volume zones is going to help you become a better trader, due to the fact that you are going to be able to know when it is dangerous to stay in specific trading levels, or when specific trading levels are not pushing up, or they are facing a little bit of a challenge. Okay, so the most important thing that we need to understand is these volume profiles have got different shapes. Okay, so we've got the B shape. It looks like this, where the point of control is at the bottom. So the most important thing when realizing the type of shape that you're dealing with is obviously getting to understand the type of shape that you are seeing on the chart. Okay, so from a visual perspective, it's very easy for you to understand. For example, this is a B shape because the point of control is at the bottom, and it's a small letter B shape right over here. And we also have the P shape. The P shape is very bullish, and the D shape shows consolidation. So you've got B, P, and D as well. So you've also got capital letter B, which can also be used to trade in specific areas, and the trading methodology that you can use depending on these shapes varies. And this is one of the reasons why I really believe this is very powerful. So now let's quickly look at what these shapes represent as far as volume is concerned. So when it comes to the P shape, right, a P shape volume profile typically occurs when a market rises sharply and then consolidates. After price reaches the upper end of the P-shape profile, there can be a period of consolidation where a balance is reached between buyers and sellers. The lower portion of the P-shape profile is long and thin, representing low volume rejection. The upper section represents where a fair price was reached and trading activity elevated. While P-shape profiles often occur during uptrends, a P-shape profile can also mark the end of a downtrend, indicating possible short covering rally. Since short covering is usually seen as a temporary strength within a market, P-shape profiles can be interpreted as bullish signals. You see, so once you get to identify a P-shape type of profile, it's usually like this, right? You understand that, okay, this is just a matter of time until we have a breakout. Okay, now this is very powerful information, because from this type of information, you are able to plan. When you see a consolidation, when the price is consolidating in a specific level, what that just represents is the ability for the buyers and the sellers to come to an equilibrium. You understand? So whoever is going to win between the buyers and the sellers, that's where the price is going to gravitate. So whenever you see a P-shape type of indicator on the volume profile, you already understand that already you have a bias towards the upside, because during a downtrend or during an uptrend, right, the buying power was very, very high. So the people who've got an upper hand is obviously the buyers, and the price is likely to continue towards the upside. So when it comes to the D shape, right, it's inverse of this. D shape is usually, like this, and then there's like a period of consolidation, and then it further continues towards the downside. So whenever you have a B-shaped, okay, whenever you have a B-shaped volume profile, this is a P-shaped volume profile where the price control is right over here and the price control is right over here. This represents a bearish trend for the most part, okay, and usually it ends up breaking towards the downside. So if you have high volume areas and then you're having like a B shape, there's a likely potential that the price is going to end up losing that point of control line, the POC, and the price is obviously going to end up going towards the downside. So if you know this, you're going to be able to exit your position and know, okay, this is a bad trade and I'm not going to persist and hold on to this particular trade. The other shape is obviously the D shape. So the D shape basically just means indecision. Okay, so this is mostly likely going to happen when the buyers and the sellers do not really know who holds an upper hand. So yeah, let's further continue. So D-shaped, we already talked about this. This is a temporary balance in the market. The point of control is typically located in the center of the profile, indicating a balance between the buyers and the sellers. Okay, so then we also have a B-shaped profile, which is an uppercase. So a capital B-shaped volume profile arises when two D-shaped profiles occur within a specific time frame. Although there's only one value area and a POC, some order flow traders will separate the profile into two D areas with their own values, etc. So yeah, that's that. The reason why I took time to explain these types of shapes is, number one, if you are trading on the Believe app and you guys are targeting the featured apps that have got like a very good community and they're likely to do very well, right? You're going to figure out points and structures that are going to give you the most fair value for that particular coin. So instead of you FOMOing prematurely, you can wait based on the volume profile. So now let's take a look at a few examples. For example, right over here, there was an endorsement. So I am on Twitter, on the official Twitter page of Believe app. And for example, these guys were tweeting about this one. It's called SCHEJ. This is the contract address. So let me just copy the contract address. So if you had the intention of getting this particular Believe app meme coin, you had to sort of do your analysis. So this was created 8 days ago, and the current market cap is right over here. So we know for a fact that at some point it's going to push up because this is obviously going to continue having momentum at some time, but we need to identify the interest of the traders and where we can position ourselves. So this one went as high as 1.2 million US dollars, and right now we do have a premium, or rather a discount. So as you can see, using the volume profile indicator, we can already see where the POC is. This is where the point of control is before the price skyrocketed. The price, or rather the point of control, was around 103 market cap, like this level right over here. And as you can see, this volume profile, if we go on a different time frame, so let's use the 15-minute time frame, what type of volume profile do we have? Okay, so we do have this shape right over here. Okay, and the price is gravitating towards the downside. So if you knew this information, right, why would you end up FOMOing here or even there? Why would you do that? In order for you to scalp it, wait for the price to come to this level, the point of control, see how the price interacts. And moreover, you can also use further probing. Let's say, for example, using the support and resistance order blocks that I taught you guys, right? And wait for the price to hit this specific level, because you are looking for the optimum support level. So if you take a look at this, right, the bearish order block that we have, the last candle before the price pumped, is a very important one. And this is one of the reasons why I am targeting this bullish order block. So basically, a bullish order block is the last red candle before a turnaround. For example, if you're having a downtrend like right now, this is a downtrend, okay, and all of a sudden the price starts pushing towards the upside and it turns bullish. So the previous last candle, the last candle before the upside, is what you call a bullish order block. So usually it offers very good support. So if you extend the candle, like the top and the bottom, best believe the price is going to come back to this level, because this was the last point that the strongest bear was at. Okay, so when it comes to trading, right, you have to understand that the price is very what's the word that I can use? The price really plays a significant role with regards to determining the demand and the supply. if this guy was the last bear before he was defeated, right? And if you are now beginning to see a reversal, best believe the level where you left the last bear is going to be retested. Okay, this roadblock right over here, before we turned around, is going to be significant in the future. So this is one of the reasons why if you only play order blocks, you guys are going to do very well, because you're going to see the levels where liquidity is going to be sacked. For example, right over here, this bearish order block. So a bearish order block is just the inverse of what we talked about. A bearish order block is the last green candle before a downtrend. If you pick this level, right, and you extend it, you're going to understand that it's going to play a significant role. For example, here, it did play a role right over here. Let me show it to you. This level, okay? This is where the liquidity found a turnaround after that amazing reversal. So you could have put your buy bid right over here and you would have done very well. So understanding these amazing support and resistance level is going to keep you grounded. It's going to make you better than 99% of the traders, because a lot of people out there do not even know what candles mean. A lot of people do not even know what a doji candle signifies. They do not even know what a morning star signifies. And this is one of the reasons why you have to go to the basics, to the fundamentals, in order for you to have an edge, an advantage, patience, and in order for you to avoid rug pulls. It's very easy to use these things, and once you like do it over and over and over, you guys are obviously going to understand from a visual perspective, and it's going to be very easy for you to figure out what is happening. So for example, we plotted the bearish order block right over here, and if we extend it, okay, so let me try and extend it. Let me extend it all the way right over here without distorting it, right? You can see that it played another significant role right over here, and best believe when or if the price comes back to this level, it's definitely going to react and it's going to end up pushing up. If it doesn't end up pushing up and it starts consolidating, you already know that consolidation shows imbalance. When there's imbalance between or rather there's indecision between the buyers and the sellers, right? You have to like look out for what is going to happen. Whoever wins, probably if you are in a downtrend and then there's indecision like that, it's probably going to break towards the downside, and then you're going to look at the next bullish order block right over here, which is going to give you the support and the resistance. And due to the fact that you already understand that the overall point of control level is at 100 and 106, you already know what to do. If you sort of scalp this level right over here, you scalp it, you already know, yeah, this thing is not going to go to the all-time high. It's going to come back to towards the point of control. Having such type of knowledge is going to allow you to always create opportunities in the market regardless of what is happening. One thing that I have to remind you is when it comes to trading the featured coins, right, you have to be very careful, especially on the Believe app meme coin. So not every coin that you see right over here is like going to survive. A lot of them are going to end up dying. So this is one of the reasons why you should stick to the coins that have got the biggest followers and the coins that are very established. Like for example, launch coin itself, the official launch coin itself, is going to be a very good project for you to trade, because you already know that it's going to be there and it represents the Believe app. So why not just trade it? So instead of you going on pause and basically trading a lot of new pairs, it's better for you to trade coins that have already established themselves to be, giants, and coins that are not really going to go anywhere. So personally, I would rather trade a lot of established coins with good community, good hype, good products, etc. I would rather trade those and just basically use the volume profile to go in and out and just basically multiply my money. And at some point, there's going to be a big reversal, and you guys by then are going to be prepared to ride it all the way up. So if we take a look at launch coin, right, let me just search for it on Axiom Pulse, and let me look for launch coin if we can find it. Launch coin, yeah, this one, is it? Yeah, it should be this one. So let's take a look at this one. Yeah, it should be this one right over here, if I'm not mistaken. Yeah, So this one was created about 3 months ago. I hope I've got the right one. So, or maybe this is a fake one. But anyhow, you guys already understand the point that I was trying to give you. So use established meme coins. You can go back to the legacy meme coins. You can take a look at Peanuts. You can take a look at the coins that have been trending for the past 1 month, and then just basically use the volume profile to trade back and forth. Understand where the fair value zone is, where the point of controls are, and so on and so forth. So this is a very powerful indicator. So hopefully, if you guys have got any other questions for me, drop them in the comment section below. However, if you take your time and master the volume profile, trust me, your PNL is going to definitely increase. Yep, see you a little bit later. Subscribe and make sure you join my Telegram group. Link is going to be in the description box below. If you want to be part of Axiom Trade, the link is going to be in the description box below, and all the relevant links that you need to make your portfolio grow are going to be listed in the comment section below or the description. See you tomorrow, and God bless you.